Welcome to Views from the Top, the podcast from Armour Partners. I'm Laura Maddison, partner leading our data analytics practice here at Armour, and today I'm joined by Fred Fosse, co-founder and CEO of Energy Aspects. Fred, thank you very much for joining us. Really pleased you could be here.
No, thanks for having me, and great to see you again.
Yeah,
and
likewise.
That too in such a lovely space.
Yeah, no, we're very lucky with the weather today. It's a real backdrop for the audience out there. And perhaps just before we kind of get into it, you and I know each other pretty well, but we could just take a moment for you to give your personal introduction, a bit of background about how you came to found the business somewhat 13 years or so ago.
I got to take you back probably a couple of more years than that, because we founded the company in 2012, but we were three co-founders. And I think it's actually quite interesting to see how you actually get together as co-founders in that kind of space, because we came from three very different backgrounds. So I grew up in Norway. Age 17, I got a scholarship to United World College in Singapore for high school. Went there, and it kind of really just changed my perspective, I suppose, on things. So after that, I went to Warwick University, and I continued to get involved in a lot of kind of extracurricular activities. And one of those was organizing a very large conference with two people who later were to become my co-founders.
Oh, really? Is that? I did not know that was how it all started.
That's
Interesting.
Right. So we had about 50 speakers from around the world, including Raghuram Rajan, who was chief economist of the IMF at the time, the finance minister of Indonesia.
How on earth did you get those characters to turn up to your event?
So we had a great team, but it's also about connections and what kind of happened earlier, because in Singapore, I got to know some of these people, right? And kind of the children, I suppose, of some of these people.
Yeah.
So then you kind of evolved and was able to kind of leverage that in a very different way. So coming to Warwick, organizing this with Amrita Sen, she studied economics.
Yeah.
Richard Bronze, who studied politics and international studies, and I studied economics with politics and international studies. And we went three completely different ways. I went into strategy consulting, Amrita went into banking, covering oil markets for Barclays Capital, and Richard went into government. And 6 years later, we were at 28 at the time, I was looking to start something, and kind of we came back together to basically start this. We were all ready to kind of leave our current jobs. We had good careers in the city, in government, in consulting. And it was kind of an opportunity to try something, and we were willing to kind of take that risk. So we went full in.
That's impressive to take that risk at that age, and each of you to have the stars align that each of you were ready to take that risk at that point. What was I guess the big driver? Did you just see a gap in the market? What was the kind of the real push?
So what was happening is that you used to have investment banking analysts, commodities research analysts covering oil, gas, commodities generally, and it would be big calls, big things, usually about one or two people kind of in these markets kind of covering that. But these markets were getting at that time more and more micro. So you need a lot more information. You need to be able to talk about the cracks, the diffs, the spreads kind of in these markets if you're going to trade them. And that was something that kind of Amrita saw that happening, and we saw an opportunity to kind of build a business around that. So we went, this wasn't kind of three kids in a garage. We had an office on day one. We had a Bloomberg terminal.
Wow.
We hired our first analyst. And about 6 weeks in, we had the first client, Taylor Woods Capital Management in Connecticut, who took a chance on us to kind of subscribe to this product. And it kind of built very rapidly from there.
Oh, it's really impressive. And look, I think it's fair to say that global energy markets have been probably one of the biggest themes of the 21st century. I mean, specifically, how do you articulate the role that Energy Aspects plays against that backdrop?
So look, this is we're now kind of 13 years in, right? And this has been built over time. But because we now work with 600 companies, we are really at the heart of the energy conversation, right? When we kind of gather the energy world for our conference, our kind of client conference, it is kind of everybody kind of who matters in these markets. It is the vast majority of traded volumes in the markets that we cover. And it is that breadth and the depth of what we have now. We started with traders. It's no longer just traders. It's a much wider audience, but the product has basically been built for that in mind.
You mean this kind of short-term part of the market?
The short-term part of the market, but also the breadth and the depth that is expected by somebody who puts money on the line in that way in these markets, right? There's a very demanding clientele. And whilst what it says on your order form for your subscription every year might read the same if you're covering the same product, what's in that is completely different year on year. Right? There's so much innovation that goes on. There's so much constant R&D to kind of help improve this, the product and kind of what we're doing.
And that's an interesting theme, I guess, just picking up on that point of the market, the specific markets you cover and how that's evolved over time. And you mentioned back since 2012. How has that evolved and how has that expanded in that period?
Yeah, so look, in the first year or two, it was oil and gas. It was starting kind of with the kind of fossil end of the spectrum. Mm-hmm. That kind of very rapidly evolved into covering emissions markets, more of the renewables that go into our power markets. We cover a lot on European power, on North America power. And there's a lot, that's probably our fastest growth area at the moment because there's so much demand for it. We cover what's happening with data centers with AI and the power consumption.
Topic we can't get away from right now.
That's super, super interesting, right? And there's so much we do on these areas. And look, the day when you kind of just needed a supply and demand balance, right, to kind of cover these markets, it's kind of long gone. Of course we do that and we do incredibly detailed work on those areas. And, but to figure out, say on the demand side, if you want to figure out diesel demand, which we do in Europe and the US, we use satellite imagery every day. We count the number of trucks on the road because that's a great kind of indicator for what's going to happen to diesel demand.
Yeah.
And I think that kind of alternative data has become very, very big. We do a lot of that, kind of building out proprietary data sets, making sure that what we have is truly kind of differentiated. But again, some of these markets have not traded on fundamentals for quite some time. So the other thing is positioning. And we acquired a company a couple of years ago that kind of helped build our quant analytics business. So this is where we're kind of able to kind of predict much more of the kind of let's call it the technical trading end of the spectrum. So that we're able to forecast that prices of a certain market will go from X to Y over the next couple of months. But actually next week you might see a very significant pullback in prices because of the way that traders are positioned.
Yeah. And how do you see that interplay between, I guess, the different parts of your proposition, both on the data side, I guess, the insight side, and how does that kind of all wrap around to one, I guess, to sort of create your kind of competitive differentiation, your moat, as it were? So
look, I think if you're active in this market, right, and
mm-hmm.
We work with all the people with a kind of material interest in the markets that we cover. Information is key. Right, mm-hmm. And you need as much data as you can get your hands on, but of course you need an edge as well, right? So you will take a lot of data from us, and then you will have certain areas that you deep dive in yourself, and where you might have some information that is different because you might be moving some of these products around the world yourself, right? Yep. You might own a refinery, or you might have windmills or solar panels mm-hmm. somewhere. Like you have some information where you think you have an edge. So you will kind of complement that with what we do. But it's about starting with all the data. It is about looking at what we do with that data because we'll also interpret that data. So what we'll say is that, look, because of these 5 factors that we are seeing in the data, in the positioning, in the way that we interact with the market, we think a certain outcome is likely. And we'll justify why that is. We won't hedge that in the last paragraph and say, well, actually something else might happen.
Yeah.
We'll be very kind of upfront. We'll stake our neck out on that. And if we get it wrong, and of course you do get it wrong, because if we always got it right, we'd just be trading these markets quietly.
Yes, yeah, exactly.
In the background. Then we kind of own up to that and we set out what happened. Well, of these 5 things, perhaps 1 or 2 panned out differently. But it's that kind of transparency that just makes clients think. We have clients that will tell them that they don't agree with our view. Right, but mm-hmm. they do still appreciate effectively knowing, why we come to a certain conclusion, right, yeah. And the way that is structured.
Yeah, I guess it's being that thought leader in the space and kind of that depth of proposition, and it's, I guess, playing that back. It sounds like it's the combination of both that data and intelligence that really kind of is the powerful piece of the
Yes.
property and bring the two things together.
Yeah, no, so look, there are plenty of players out there that provide data, right? But they don't actually know what the data means. And the thing is, if you just provide data and you don't quite understand what it means, you're also not able to get the data to the same quality, because you do need to sometimes correct this data, right? It is these are opaque markets that we operate in.
Yeah.
And with opaque markets, you sometimes, people will feed false information. You'll have, as ships move around the world, they'll fake AIS signals, and we know what's going on, and we know what matters, and we know, we mapped every single refinery around the world, and we know the margin calculations for them, so we know what, if they take a certain type of crude in, we know exactly what they're going to be producing coming out of that, which then as well means that when you look at flows around the world in these kind of commodity markets and what's being transported, you also know what is correct and incorrect, and that's what's happening.
Yeah. I think that plays into a really interesting point, because, I mean, look, AI is clearly a debate around for every board of every C-suite of every business right now. But there's obviously a lot of kind of some views out there that, that you can kind of LLMs or machine learning can collect all this data, and therefore how much enrichment is required. But I guess hearing your kind of positioning around that is, look, data is just one part of it. If you can't interpret that data in the right way, it doesn't have the same value. How do you think about AI more broadly, both in terms of how it's changing the markets in which you operate and also changing the way you run the business and how you kind of go to market?
Well, look, that's a good question. Look, we see AI as a huge opportunity, and it's one that we have been using now for several years, right? And it's more than a year ago that we launched our AI assistant to clients, but it probably took us about 6 months before that to basically just put guardrails around that.
Testing and really making sure.
Absolutely, because look, there's nothing worse than our AI assistant giving a view that isn't ours to a client, but that being perceived as coming from us. So we need to make sure that this thing wouldn't hallucinate, that we had a kind of very, very strong way that it kind of would respond. So what we did is we launched something that will reference back to our written content, so that you can click through and you can see the original paragraph where that comes from. But it will also take data from our API, and it will chart that data for you. So it will set it up in a chart that you can then edit. You can pull the data from it. You can share it with your colleagues, right? So it's a very interactive platform that we have. And AI just makes that much easier, right, for clients, because there's so much content that we publish. Whereas what this allows our clients to do is, they'll sit in meetings, discuss topics, and then say, well, what does EA think about this? And just ask the question of the AI assistant, and immediately that'll come up.
Yeah, so it sounds like a real enabler and accelerator, and particularly kind of for your clients being able to access your data. And as you say, though, I guess it's really important to have taken a long period of time to build up that position of authority and trust, and to make sure it's fully tested before being rolled out. But it sounds like you've made really good progress there.
Yeah, absolutely. And look, what happens here as well, right? We maintain more than 35 million time series internally in our data warehouses, and then a lot more structured data than that as well. And when you kind of add up all of that together, when you can kind of run AI on top of that, to find correlations, find things that you might want to explore, that gets very interesting as well. So for us, this is just about opportunity. And I believe that AI and proprietary data goes really, really well together, right? That's why we are not concerned about AI kind of replacing what we do, because as long as we have proprietary data sets that are hugely important to our clients, then AI becomes an enabler as opposed to a threat. And I think that's very important.
That makes sense. Another, I guess, a big theme and topic sort of more broadly against the sort of the global energy backdrop is energy transition, net zero. Again, you can't pick up a paper without reading something about it. What's your perspectives around, I guess, how that changed the markets and the market specifically that you guys cover? So
look, demand keeps on increasing.
Yep.
Right. And
you mentioned data centers. I mean, it's not going anywhere.
Absolutely. And look, what basically happens here is that I want to see as much renewables come on board as possible. Right, it's positive for us, but it really is about energy addition rather than energy transition, because we cannot just close our eyes and say that we don't need oil and gas. Right. Europe has, post Ukraine, Europe started using more coal again as opposed to less. Right. And, if you actually want to make a difference, from an environmental perspective, tackling coal, oil, gas is more important than just focusing on the renewables. It's about making what you have cleaner as well.
Yeah.
Look, as a company, we are completely like non-advocate in any of these kind of situations, because we believe in transparency and information. Not, we're not going to predict what we hope personally should happen, right?
Yeah.
We will be realistic about what's happening, because that's what's important to our clients. But we, as a company, we also have a foundation, EA Foundation, grant making foundation. Last year we did about $2.5 million to good causes.
Wow.
There's a lot we can do with that, and environment is kind of one of those. And we use information, of course, from kind of what we get from our services. But we cover offsets, we cover emission markets. And that's valued by a certain set of the market, but I don't think you can take away the importance of covering the fossil end of the market as well.
Yeah, I totally take your point. It's about kind of almost whole market coverage, and it's not your role to place bets on direction of travel, but just to kind of provide the data, information, intelligence for your clients to kind of make those choices.
Exactly.
And then I just coming on perhaps to more the M&A side. I mean, as a business, you've been acquisitive, and I'd say very thoughtfully acquisitive. You kind of, bought carefully and thoughtfully and made some really additive acquisitions along the way. Perhaps you can share a little bit more about, some of those acquisitions, particularly as a founder, how you found that process, how you uncovered them, how you successfully integrated and unlocked them on the other side. There's quite a lot to unpack there.
Yeah, absolutely. And look, if we got a couple of hours, I'm happy to take you through the detail
exactly.
of all of that.
It's a separate podcast.
Yeah. But no, look, for me, acquisitions are a great kind of opportunity for us to kind of add capabilities in particular, right? We have to be kind of leading in kind of everything that we do. Is kind of how we set up. So if we're going to acquire something, it has to be either because it's already a leading kind of in their space, or something that can become that under our leadership. And adding capability through acquisitions is a great way to kind of fast track things. Most of the things that we have acquired, we could potentially build as well, but it would take us a long time to do that. Whereas we can move a lot faster when we acquire that. So we've actually acquired mostly quite small companies, with great product, great people that kind of will fit in. We've also looked at acquisitions that had great product, but actually there wasn't a cultural fit with individuals. And for me, that just doesn't work at all. It has to be, we walked away kind of halfway through kind of investigatory kind of conversations, because we haven't found a fit with the team. Because again, we're a people business, culture is important, and kind of getting that right is key kind of to us. But look, the businesses that we have brought in have, we've been able to add very significant kind of subscription base to them when they come in, because our client base are, they see us as a high quality product. There's a trust in that. So if we go and acquire something, they think it's worth looking at to see whether, of course it has to be relevant for them, etc. But it's a bit like when we bought a quant analytics business, it was one that covered just oil at the time. We cross-sold that very quickly into our client base, but we also developed and scaled up that team tenfold to cover a number of new markets, so that it kind of could also cover oil products, it could cover natural gas, but we also went into kind of selectively into metals and ags and even bond coverage kind of for that.
Very interesting.
Kind of expanding into new markets.
So really proving out that value kind of creation strategy on the back end.
Yeah, absolutely.
And how did you uncover some of those assets? I mean, did they come to you kind of through advisors, or was it kind of you say kind of building those relationships in the market and being, I guess, seen as a preeminent player in the space, and therefore sort of people coming to you saying this could be interesting?
So look, it's a combination, right? And you've always been helpful with suggesting companies that we might want to have a look at, or I should have a conversation with. And that's one way of getting this. But it's a bit like when we acquired Oilex, which was probably the only company that kind of did keep me awake a little bit as somebody that could be a future competitor. So that one was a little bit different. And they had a great product that we could kind of take on board and integrate very, very quickly. But because of the way that worked for the founder of that company, Florian Taylor, he recommended us to others that were similar entrepreneurs in other spaces. And so actually these guys, this is a good kind of path, because you have a number of these guys that will build a great product, absolutely love that, And then kind of once you have to start dealing with legal and compliance and HR and all the other fun stuff, suddenly it's not that fun to kind of run the business anymore.
Yeah.
And if you can find a space where you're allowed to kind of continue to thrive in a kind of under a strategic kind of in our language, then why not?
Yeah. And I guess, look, perhaps talking about your own funding and background, obviously kind of you were founder-owned, bootstrapped, still founder-owned for a number of years, but you brought in a growth investor in Summit Partners a few years ago. Perhaps you can just talk to us a bit about that process and maybe any kind of advice for, other founders looking to bring a growth investor alongside them.
Yeah, no, absolutely. Look, the impetus for us to bring Summit Partners on board was actually because we started kind of doing slightly larger, more expensive acquisitions.
Yeah, so it ties in with that strategy.
Exactly. We couldn't kind of no longer do that of our own balance sheet. And I think, if you want to go and get credit from a big credit fund, the DD is as involved as it is with a private equity fund. So it was a great opportunity to do that. And I had developed relationships with a number of private equity firms kind of over the years, so that there's a lot of dry powder out there, but you want to make sure that you work with somebody that you enjoy working with.
I guess it comes back to that same cultural fit, to your point of when you're looking at acquisitions, equally for looking at your new partner, that's presumably pretty important.
Absolutely. And we were very lucky with that in Summit. We have a great relationship. We get support when we ask for it, but we also get, it's actually not a deal source for us, deal flow source, where they are having conversation and suggesting things that might be interesting for us to have a look at. But it's been very supportive. For me, it's a financial partner rather than just kind of funds, right?
Yeah.
And that is very helpful, and it's very helpful on the M&A side. But we've also had their team kind of support us when we kind of refreshed our commission plan for the sales team, other things. So they're able to work kind of with the organization, but where they are, they can offer help, we can ask for help, but it is not in any way kind of imposed. They leave us to get on with it, and they're very supportive of what we do. So from that perspective, it just works really well for us.
Yeah, sounds like a very kind of a fruitful relationship. And I guess more broadly, as you look back at the journey now, so if you mentioned back since 2012, quite remarkable, the journey you've been on as a team and as a business. What are the things that stand out for you as, I guess, high points, lesson learned, again, perhaps for anyone listening to this that might be sort of starting out on that journey today?
Look, benefit of hindsight is a beautiful thing.
Isn't it just? I think we could all do with that sometimes.
Yeah. And look, there are plenty of things I would do differently. But what I would say is that we've achieved kind of what we've achieved almost despite of rather than because of. It's not because we got everything right? It is because, we only set up our customer success team 2 years ago. We only really built out our marketing team last year.
Yeah.
Right. So there is a... it's been more kind of slow and steady wins the race type of approach to this. We've been profitable from day one. We were profitable long before it was fashionable to be profitable, right? In this industry, and kind of that's kind of been a deliberate choice. But with the benefit of hindsight, would I have gone faster and harder on a number of these things? Of course, I would have, right?
Yeah.
And we could have reached other levels because of that, but we want to do it in a way that we were comfortable, the team was comfortable, and really just something that kind of built the foundations to an incredibly strong level.
Yeah, and arguably, there's take your time to do that. The foundations are stronger, more solid. As you say, you've got to learn some lessons along the way, but you're probably not taking a risk if you're not learning some of those lessons, and everything goes right all the time. And I guess, look, how do you then think about the future in terms of what's next for Energy Aspects, and how you see the business developing from here?
Look, we're a platform for data and intelligence, right? And we've done that for a lot of the commodity markets. I mentioned a little bit on metals and ags and other things that we kind of dabbled into, but more because they kind of fit into our jigsaw puzzle, if you want, right? They're adjacent to the spaces that we're kind of operating in. And we're seeing the convergence of energy and metals, right? We are seeing, how that energy transition, energy addition, is affecting the world. So we're there and kind of supportive of that. And it's a little bit like how when we added the methanol business last year, very quickly you can take a business that has great content, but you can kind of put it onto our platform. And immediately clients have an API. They have iOS and Android apps with notifications. They have, visualization tools. They have, like a lot of these kind of analytical tools, like very, very quickly. And if you think about that kind of for the future for us, it kind of allows us to enter new verticals quite quickly. Like we could build it internally, or we can go and acquire something and kind of do it in that way. But kind of that broadening of the base is something we're going to do. But the existing services will also just continue to get more and more depth kind of to what we are doing. And with everything that we're doing, it's all interconnected, right? The output for us on one service is the input to another.
Yes, like that strategic coherence is really important to you. It's not
correct.
growth for growth's sake. It's strategically aligned.
Absolutely. And these are not silos that kind of operate. We integrate and kind of work together and make sure these things actually do connect. But we're doing more and more kind of in Earth observation, in kind of making sure that you can leverage all these kind of alternative data sets that we can build or acquire and effectively take to our clients. Because to have that edge, we listen to our clients, we get the feedback, we know kind of what they want, but actually they also pay us to kind of stay one step ahead and to tell them, actually, you should be looking at this, right? We are the agenda setter very much for the kind of industry. And that means that we continue to invest a lot in R&D and trying things out, many of which don't pan out. They don't turn into a product or service because it's not strong enough. But it's our job to make sure that we've tried those things and can kind of evolve and then kind of build it out in that way.
Yeah, well, look, and against such a dynamic market backdrop, that must be hugely important, as you say, not only kind of staying relevant, but staying ahead and, kind of leading your clients. Thank you so much for such a good conversation. I really appreciate you making the time.
No, absolutely. I actually really enjoy that. I look forward to next time. And I think there's probably a lot more topics we can cover.
Yeah, we'll have to do a whole topic on AI and data centers maybe next time. That's one for another pod.
Definitely.
And look, thank you for joining us today on Views from the Top, the Alma podcast with me, Laura Maddison, and Fred Fosse, CEO and co-founder of Energy Aspects. Look forward to seeing you again soon.